Hey everybody, this is Jim at SP500chart.com. It's about 2:30 on June 22nd. That's a Sunday, and it's 2014. And we're going to take a look at what happened this week in the S&P, what happened on Friday, and see if we can get any sense of what it means for this upcoming week. Before we take a look at that, I just need to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, just a couple things. Our week is highlighted in this little gray rectangle. I would say square, except it's not a square. Now I can say square or close to it. And at the end of the last week, I mentioned that we'd been in this 3-day sell-off that accelerated on Thursday, and I just kind of flippantly pointed out, let me get rid of that moving average, pointed out that, that looked like that might be a little capitulation there. And if we got above this little trend line, here, let's zoom in a little bit, that if we got above this little trend line here, that could be setting up a move that reverses the what had been at that point 4 days of selling. Okay, fast forward to Friday. We did get above that line, but essentially traded, for the most part, sideways. Then we, early in this week, I believe, at the end of the day on Monday, which would be right here, we discovered this little inverted head and shoulders pattern. Now, by the time we were in Friday, in other words, it took Monday's data to make that pattern a potential. Before then, it was, we were just, the only thing we had going for us was the fact that we had seen that little accelerated selling, which is often a sign that a bottom is in. Conversely, if you see an accelerated rally out of the top side of a channel, that's often a sign that a top is being put in. You could look at it like this. The last people who typically respond to a market move, whether it's up or down, are usually people who do so not out of reason and not out of discipline, but out of either fear. Well, it's always out of fear. On the downside, they sell because they're afraid they're going to lose. They're afraid they're either afraid that their profits are vanishing, or they're afraid that the trade they placed a few days earlier was going terribly wrong and they can't stand the pain. On the other side, the fear is, I'm missing out on a big move. Okay? There's two kinds of fear. There's fear to the downside, I'm going to lose, and there's fear to the upside, I'm missing the gains. Okay? Well, anyway, come into Monday, we saw this inverted head and shoulders pattern. I just think it's interesting. Often the head of these patterns does form on an accelerated downward move. So Tuesday, we momentarily broke this neckline. By the way, on Tuesday, we knew this was a neckline. We momentarily broke it, came back down to about this line here, then rallied back up, came back down to this line again, and then on Wednesday, after it was either the Fed made a statement or they, I can't remember whether it was a statement or whether they released minutes. I just read charts. Here's that nice move there. Thursday, we see what appears to be a bull flag forming. Yes, indeed, it was a bull flag. It actually broke out on Thursday. And then on Friday, we spent the entire day over 1960. Now, we are at a level now that the S&P has never been in before. And we've got a few trend lines coming up that are above us. Just out of general, general principle. Simply out of general principle. It seems right that we should be testing these lines up here. So I'm fully expecting this week to at some point test these lines. Now, I didn't say right away on Monday. That could be. We could gap up on Monday to 1970 and end up on Thursday at around 1980, at which point we're real close to that 1990 target from our larger inverted head and shoulders pattern. But I don't know what the path is going to be. We could come down on Monday. We could end up, getting down into the. Actually, we could end up getting down into the low 1950s on Monday, and then maybe we bounce off this line. All I'm saying is on general principle, the fact that we have obviously some steam in this market. And by the way, we never have really back tested this red line. Just out of general principle, it seems to make sense that we would be testing some of these levels. If we zoom out of this chart just a little bit, again, here is our target from our inverted head and shoulders pattern right here at 1990. If you want to see that pattern again, here it is, right here. It's not a perfect pattern. As a matter of fact, it's a little bit. You could. Well, I tell you what. I think I'll do this just to be on the safe side. You could look at this pattern and say it's a diamond. Now, diamonds usually happen at tops. But if this is a diamond, then we would be seeing a possible different interpretation in which our target wouldn't be quite so aggressive. We could possibly, if this is a diamond pattern here, and the reason I say that is because we're missing that touch over here on that left shoulder. So if this were a diamond, then 1980 would satisfy the diamond because this neckline would not be a straight line. If this were a diamond pattern, we would probably have a something like this or that. The point being, it's possible that our breakout took place here and not here. So that's just a fine point, because this isn't a perfect pattern. Feel I probably ought to point that out. But I'd also want to remind you that when we talk about targets, we're not talking about the place where we hit a brick wall. When we talk about targets, we're talking about a place where we fully expect to achieve. And because it is a minimum target, these patterns often overachieve. As a matter of fact, so far, every inverted head and shoulders pattern in the S&P over the past 5+ years, with the exception of this one I'm just talking about, 100% of them have overachieved. Okay? Just to remind you of what I'm talking about. We had an inverted head and shoulders pattern back here. Back in the fall and winter of 2009, it broke out in summer. At that breakout, we had a target of 1340. That was overachieved. We had an inverted head and shoulders pattern right here. I believe the target from this one was actually less than 1340. So this big pattern sort of trumped that, but it overachieved. We had an inverted head and shoulders pattern here. It overachieved. This one overachieved. This one no longer marked, overachieved. So far, this has been just one episode of seeing an inverted head and shoulders pattern. First, the big bottom that formed over about 9 months and broke out in 2009. That was the big market turn. And since then, they've all been continuation patterns. If you've been with SP500chart.com, you know we've been following these things on the YouTube channel for now in excess of, I think it's been about almost 3 3/4 years. So you know that we've been following these things really, really closely. And they've been tracking extremely well. So, just by way of weekly review, I think it was a great week. Things worked out. We recognized patterns. The patterns worked out. We saw the inverted head and shoulders pattern. It did its thing. We saw the bull flag. It did its thing. And now it looks like we may be dealing with even another little flag pattern here, or a triangle. Now remember, they can go up or they can go down. So this one doesn't have that same built-in bullishness that we had down here. Okay? Because we are still inside of this pattern, and because it's going sideways, whoever is the first to blink, that's the way the market will go. If the bears blink, then we rally up out of this and could get up into the 1970s. If the bulls blink, then we fall down out of this and we come down to test support somewhere. Regardless of whether we break up or out, up or down from this little pattern here, quite frankly, it doesn't bother me one way or the other, because we got 1990 on the radar. So that's going to be my MO for this week. That is, unless we start plowing through support, I'm going to look for 1990. Either, I'm not saying it's going to happen this week, but I'm saying I'm going to wait for it to happen, and I'm going to expect it to happen unless we start to plow down through some support lines that we have underneath us now. So guys, I think I'm just going to make it that. It's pretty short and sweet. It's a pretty easy chart right now. So I just want to take time to thank you for watching this video. Thank you for your support. Thank you for your subscription. Let me say one more thing. If you are not a subscriber, it's not expensive. Go to SP500chart.com and see how much it is to get a daily video after each day's close that goes into this kind of detailed analysis. Guys, I don't know anyone else who's doing this. There may be, but I don't know anyone who does this every day. So guys, thanks for watching. Thank you for your support if you're a subscriber. And if you're not a subscriber, please think about it. Come visit me at SP500chart.com for the details. Take care.